Welcome to today's episode of MicroConf On Air. I'm your host, Rob Walling, and it has been a minute. Producer Ron and I were just talking. It's been a month or two since we've done an on air, and that has been due mostly to travel schedules. But when we're not constantly on the road, every other Wednesday at 1 p.m. Eastern, 10 a.m. Pacific, we live stream for about 30 minutes. And we cover topics related to building and growing ambitious SaaS startups. These are companies that bring us freedom and purpose and allow us to maintain healthy relationships. It's going to be a great time today. We're talking about the insights of second-time founders. I'm going to bring my guest on in just a second. As a reminder, you should and can ask questions of myself and our guest today. That's why we do live stream. Otherwise, we would just go record a podcast and it would, be edited and all fancy and such. But the whole point is to be live here in front of you, such that in the YouTube chat or in MicroConf Connect, which is our preferred method. MicroConf Connect, there is a MicroConf On Air channel. It's been a while, so I'm going from memory here. MicroConf On Air channel, and you can pipe questions into there, and producer Ron is monitoring those. So Insights of Second-Time Founders is going to revolve around finding product market fit, and it's going to be around things that second or third or fourth-time founders do better or know more. This ties a lot, no more than when they were a first-time founder. This ties a lot into stair stepping, where I talk about your first step is to build something relatively simple, perhaps relatively small, perhaps a single traffic channel, pretty easy to find product market fit. Don't get too clever or too novel, and figure out a way to do that until you buy out your time. And then you can move up the chain as you gain this experience and the skill set and the confidence and frankly, some money to be able to do harder and harder things. So it's going to be a great conversation today with Jen Abel, who is my guest I'll bring on in just a second. Jen is a B2B entrepreneur. She's founded JJellyfish, and that's with two J's. So it's Jellyfish. And she's demonstrated a passion for the 0 to 1 stage in the US market. 0 to 1 being getting up started to product market fit. Jellyfish has supported more than 200 startups and helped them validate their commercial models, acquire initial US revenue, and define a repeatable go-to-market strategy, along with Fortune 500 companies seeking to validate new commercial ventures and prove traction. Welcome, Jen Abel, to the show. How are you?
Rob, it's great to be here. Thanks so much for having me.
Absolutely. It's great to have you on. And to let folks know, if I start to sweat, my power is out. I have no air conditioning. It is hot. The good news is, I don't know what the good news is, but the good news is the internet. The UPS has kept my internet up. So hopefully, fingers crossed, I have at least another 27 minutes of internet and we'll get through all this. So
oh, did we lose Rob? Ron? Oh, you're on mute.
We did lose Rob. Let's see if he pops back on here.
Problem.
Let's see. Send him a note.
Tell me that timing wasn't amazing.
That was
awesome. The best. I'm
I'm
tethered to my phone now, so as long as the phone battery lasts. All right, I'm back. The live stream is still alive. I wanted to ask you about pivoting. Pivoting. It's this, there's so many misconceptions because I think it's like so few people do it and so many people do it. And I think they often don't even know really what a pivot is. You want to talk to us about, across your experience, tell us what the misconceptions are. Tell us what your experience is.
Yeah. So when you think about, first of all, if I could take one step back from why the importance it is of pivoting. So, a lot of first-time founders, right, will build a product and then go out and try and validate the market, right? They have their product built, super excited. Now they want to go sell their baby into the market. While second-time founders do the inverse. They actually will go out and validate the market and understand the problem and then build the product, right? So when you think about a pivot for a first-time founder, because the product is the starting point, they're going to be trying to pivot all across their product, shifting the value, maybe even readjusting their vision. Like they're going to be in this vicious cycle of trying to build a product. And then all of a sudden they start to build this really interesting thing that has been consensus focused from everyone they speak to. When you're thinking about your product, you should never take advice from the market unless they're a paying customer. So first and foremost, you'll see a lot of first-time founders make that misstep of, going out and speaking to the market, asking them what they think about their product, and then adjusting their product accordingly. And all of a sudden, there's all of these different iterations from there. Versus second-time founders who first validate the problem, right? The market is the expert on the problem. The founder is the expert on the solution and the vision of that solution. So when you go out to the market knows their problem better than anyone. So it's great advice to say and validate, hey, help me understand the types of problems you're facing. How are you trying to prioritize this? Now, mind you, you need to go out with some set of vision. Otherwise, you're going to be collecting a lot of noise. But when you go out and test the assumptions you have about what the market needs, what their unmet need is, the best thing to do is actually then use that to then fuel and build your product. So now when you're a second-time founder, you're iterating and pivoting on the market problem, which is way more sustainable than sitting there and trying to re-engineer a product every time you get a new piece of feedback. So a pivot is something sometimes different to whom you're speaking to, but the grand vision of what a pivot was really meant for was adjusting your market or adjusting the problem the market is facing and then backing your solution into it. It wasn't to go out and build a new solution every day.
Right. Uh-oh. Did I mute myself? Yeah. Oh, okay. So I'm having trouble with my mics and settings, but don't mind that. You know, my second book was called Start Marketing the Day You Start Coding. And what it was aimed at developers and product builders who, and now these days I say start marketing before you start coding, but that was, how I thought about it then was when you start building, you should already have, some idea of the problem, some idea of the solution you're trying to get to.
Yeah.
And what's interesting is no one listens to me. I've been saying this for 15 years and it's like, it just people, they don't internalize it. They can hear that from you and I over and over, but you're right. First time founders haven't gone through the pain.
Yeah.
Founder they've taken the gut punches, right? And so they're more likely to validate.
And the thing is it's much easier to build a product. It's you have way more control versus when you go out to market and someone's like, that's not a problem. Or like, I wouldn't use that. That's hard to hear. So yeah, I totally agree. I mean, we all default to where we're comfortable. And of course, if you look at what most founders are, they're product and engineering centric and technical centric, and the product is their expertise. So that's why I think they spend so much time there and want to default there.
Right, because that's where the certainty is.
Yep,
I am
exactly.
certain I can sit down today and I can write 100 lines of code. I can build a feature. I'm scared because of the uncertainty of, I don't know if anybody wants this. I don't know if anybody needs this. I don't know if I can sell this, right? These are the scary parts. And so I think that's what we're trying to, so talk about that a little bit then. Product validation before product development. How would you, if you were starting, let's say SaaS today, because that's really what MicroConf's focused on. If you were going to start a SaaS today and you had an idea, hypothesis in a space, I want to build a CRM, an ESP or whatever, like how would you think about and go about validation before development?
Yep. So when you go out to validate, it is really, really critical. I think people misconstrue what customer discovery and validation is. They think it is. Let me just give you the misconception. The misconception is go out, talk to the market, listen to them, and report back what you hear. Okay, that's half right. You need to go out to the market with a set of structured assumptions and let them help you identify what is most true about your assumptions and what is most false about your assumptions. If you go out to the market and ask them what they want, you're going to bring back a ton of noise. So you need to keep it somewhat constrained in focus, like you mentioned earlier, about doing one thing and doing it well. Pick 3 or 4 things you believe the market is facing and let them then tell you which one of those 4 is most true and maybe which one is most or falsified. Do not just go out to the market having open-ended questions, expecting them to give you vision. You need to set the vision. So, when we talk about problem validation or customer development before product development, that means get the assumption validated prior to building the product. Now, you can have some level of early lo-fi product built or have something structured where if someone says, let me see it, you can, put something in action. But I'm talking like, don't overbuild, don't over-engineer, don't go, put 90% of your time into just building the product. It should be split 50-50. 50% of your time should be speaking to the market, and maybe the other 50% should be using that market's insight on the problem to then further develop the product. Because I've met a lot of founders who have built the product and the market doesn't agree the problem exists. And that is the first thing that's going to crush your business. You can have an ugly product, but if you're solving the right problem, you'll be okay.
Yeah.
You just gotta
Yeah. Yep. And I'm glad you mentioned having a vision as a founder, because I will hear people say on Twitter, YouTube, whatever, and they'll say, just talk to your customers. Your customers will tell you what to build. And I say, with my last SaaS company was called Drip. It started off as just an email capture widget. It was in 2012 before anything, there was no opt-in monster. There was no Sumo, right? So we built essentially the first productized SaaS version of just an email capture pop-up. It could do toaster widgets in the bottom. It could do exit intents, blah, blah, blah. And all it did was do that plus send like an email autoresponders, like a sequence. That was it. Yeah. So it wasn't MailChimp, right? It didn't do broadcast. You couldn't import lists. It couldn't do anything. It was just opting in. That was the initial hypothesis. We eventually became an ESP, right? We started competing with MailChimp. Our customers, the early ones, all wanted us to just copy MailChimp, and they all wanted us to copy Infusionsoft. They kept saying, like, people would be like, we want you to build a shopping cart into your ESP. We want you to build affiliate management because Infusionsoft, if you did that, I would switch. We want you to build an Android app and an iOS app. And I'm like, we're a bootstrap team of 2 people, like in a closet in Fresno, California. We don't have the resources. So as a result, as you said, you can listen to your customers, but some customers are going to send you off on wild freaking goose chases. Yeah. And you have to know or some filter, right, to say which of these requests, right, or which of these data points am I going to take in and act on? So with that in mind, like, how do you think about doing that filtering and going after the ones that are right?
Yeah, and you make such a good point, because when an early adopter or your first few customers, they're not going to buy a platform. They're going to buy an injection point where they can say, you know what? I think you can do it. Let me test it first. What B2B buyer or executive is going to say, yeah, let's rip out everything we've just done and implement this unknown thing to do all of these other things, right? That you almost want a very small little entry point that can be tested, and then you can always expand from there. And I always say 80% of the value usually comes from 20% of the product the first time around. Yes, 80% of the value comes from 20% of the product. And to what you're saying, like, it's so like, if you go out and speak to the market and they give you all the things that they want, you're going to end up with a Swiss Army knife. Do you know how hard it is to sell a Swiss Army knife? Like, that's a really, really hard. Who's your customer? What do they care about? Why are they going to use a Swiss Army knife? There's millions of reasons to use a Swiss Army knife, right? And I think there's this misconception that, when you go out and raise funding, your VC wants to have a large market, which is true, right? Because they have an objective too. However, a horizontal product on day one is a disaster. You need to verticalize, and you need to have traction, and you need to build specificity and trust with a very specific customer base. And then you can easily expand from there, right? Getting your first 2 customers that look alike makes getting your 3rd, 4th, 5th customers easier and easier and easier. And there's these compounding effects. And once you have product market fit there and the wheel is spinning, the momentum is built, you can then use that revenue and then say, okay, now let's go test the net new segment, right? And start to build on top of it. But yeah, I mean, people, and the other thing too is like, when you reach product market fit, a lot of people want to build upon their product and sell to existing customers and just create more value that way. That is so much harder to do than take what is existing working and then going out and starting to add more and more logos, because you also want to diversify your customer base. You don't want this concentration of 10 people that, are buying more and more of your product, and you get one to leave and all of a sudden everything breaks. So yeah, the idea of being extremely focused, having a clear injection point, a clear entry point, and expanding from there is really important. And you don't need to overbuild. Like, it doesn't require that much. You're not building a platform on day one.
We have a couple questions actually. So yeah. Brandon Branner on YouTube, he says, how do you find the market? I think that is my biggest problem. And I think he's referring to, how do I find people to speak with, right? Even just the initial. And I'm going to throw out just a quick opinion on it, because The answer is it depends on your market. So we have I've invested in 100 companies between Tiny Seed and my personal investments. We have a app called, or a portfolio company called Sign Tracker, and they are SaaS for running your sign making business. Like if you make signs, you often see the storefront of, in a strip mall that's like, we make signs. Okay. How are you going to find those people? Well, they're probably not in Facebook groups. They're probably not on Twitter and Hacker News, right? It's like you either cold call them, you visit them in person. What do they say? Go to the phone book, and you make a trip to them. Yep. On the flip side, when I started Drip, the ESP, I didn't have to look in the phone book or drive around because I knew that, well, there were going to be SaaS founders, there were going to be bloggers, there were different segments that you really needed a good ESP. And so I knew where to find SaaS founders. Where are they? They're on Twitter. They're listening to podcasts. They're in some Facebook groups. And same thing with, bloggers. It's like they all hang out and go to the same events, right? So that's how I looked at it. But, Jen, I'd love to hear your opinion.
Yeah. So my expertise is really in the B2B world. So I don't know how much this will pertain to B2C, but B2C is much more of a marketing objective, right? While B2B is much typically, obviously a product-led growth and all these other different go-to-markets, but typically is, somewhat sales-led, at least in the beginning.
Right. Which we are. So MicroConf in general, like my advice is don't do B2C SaaS. Like it almost doesn't exist, right? We're not Netflix and Spotify. Like we are bootstrapped in most of bootstrapped. So everything's B2B. We can just assume B2B SaaS in this conversation. Awesome. But sometimes now B2B can be marketing led, right? Without sales. We can have like no touch, low touch. Yeah. But both those approaches.
Yep. So if you think about, I think first of all, in the 0 to 1 journey, when you're getting your first customers, to your point of doing coding or marketing before coding, you got to do sales before marketing, right? If you can't nail 1-to-1, you're never going to nail 1-to-many, right? As a founder. So, or in anything you're doing. So if you're targeting B2B, right? Almost everyone has a pretty up-to-date LinkedIn in most cases, right? So going on LinkedIn, getting access to tools like Apollo or data.com and segmenting within those tools to figure out your market. So there's two things that are really important about a market. One, how big is it? I know many people that want to sell to CMOs of venture-backed startups that have a marketing team size of 50. Okay, I'm just using that as a constraint. That actually might only be 50 startups. Right. So you have just built this whole go-to-market and focus of trying to target this very specific group. And the size of it's pretty small. Now, that's okay if you're looking to get your first wins. But like if you want to generate some sustainability around what you're doing, you want it to be at least going to be able to produce $1 million in ARR. Right. So when you're thinking about your market, the math piece must play a role. The second piece is you as the founder, you need to know who you built your product for. No one else, the market's not going to tell you that. They don't know, right? They only know their problems. So you have to have some idea of, okay, here are 3 different types of specific groups I could sell to. And then what you need to do is go out and validate it. And it's a process of elimination. It's not a hedge. Don't go out and talk to all 3 different segments because you're going to bring back a lot of noise. Pick one, understand the math behind it, make sure it makes sense, and then go speak to 10 to 15 executives that you can get on the phone by sending a personalized cold email. Okay. If they're not inspired by the problem that you've listed in your email, that should also tell you something, right? So you almost have to run it through a little bit of an experiment to understand, can you even inspire people to take a call with you based off of the problem you're solving? And once you're on a call with them, what are the 4 problems you believe they're facing today? And that's when you want to test your vision. And you might come back after 10 calls and be like, none of my vision is correct. So you have an option. You pivot on the ICP, on your target market and test that the next one, or you dig deeper into the insights you've collected from learning from these folks and say, okay, I was off here, but there's something over here. Let me dive deeper. And it's truly about finding repeatable themes and understanding where the rejection will redirect you. And that can only happen in, 10 to 15 conversations. But again, if you can't even get them on a phone call, you also should be questioning, is this a market that's even inspired to want to learn more about this?
All right. Next question. We have 4 more questions that just poured in. This is great. So lots of stuff coming from YouTube. Tech_ology asked, so this is I'm interested to see your reaction to this, Jen, because this is a fun one. So after talking to friends/family and some random people about your product. When do you know if it's good to build? How do you know that you validated enough?
Yep.
And it feels like you started answering that question with the prior answer, but you want to keep going with it?
Yep, sure. So first of all, never take any advice from friends and family.
Thank you for saying that.
It.
Thank you.
Remove it. It will hurt you more than help you. So just completely strip anything they've said. Okay. The unaffiliated customers or the randos are the sweet spot, right? How did you get a conversation? Well, I guess I can't talk to them directly, but how did you get those conversations? I would keep doing that if it's sustainable and get more conversations. Again, there's 3 questions you can ask of a unaffiliated prospect that will help you determine leading indicators of them being an early adopter. 1, do they agree a problem exists? Can you simply get a head nod? Okay. Gate check 1. Gate check 2. Have they tried to solve this in the past? The number 1 question, right? Historics are leading indicators of future intent. If they have not tried to solve this in the past, dig into the why. There might be a reason. It might be more of a relevant problem, but or a recent problem. But if someone has tried to solve this in the past unsuccessfully, leading indicator number 1 of an early adopter. Okay. The third piece is, do they currently have budget, or do they know how they would create budget to pay for this? If they can't answer those last 2 questions, okay, I would mark that as false, right? Because just because they agree it's a problem doesn't mean it's a prioritized problem. That's what you want to understand. So, there's certain gate checks you can go through. Those are the 3 types of questions I really like to understand in terms of the depth, in terms of where this might sit on a priority list. And the number 1 leading indicator is that historics piece of, hey, I have a problem with Y. Great. How have you tried to solve for Y? Well, we actually purchased X, but it didn't work. That's where you want to spend your time. Dig deeper with that individual and try and see if you could sell it before you build it. Like, hey, would you be a design partner with me? I'd love to bring you in on this. If you didn't work with me, how else would you solve for this? And just there's different types of questions like that you can start to seed them. And all you're trying to do is get the why behind the why behind the why, which hopefully will give you the true intent.
Very nice. Next question is from Pavel Pavel 6 on YouTube. Let's touch the main area of Jen's expertise. How do you make it in the US after reaching product market fit in a different region? How much tuning, or I think how much tuning is to be done? I think, how many adjustments and changes, or usually are we talking about starting from scratch?
Okay. So this is a little counterintuitive. So the counterintuitive piece is, because I found product market fit in my local market, it will be easier to find product market fit in the US market. It is actually harder to find product market fit in the US market after you have found product market fit elsewhere. I know that seems odd, but let me explain why. 1, you have the mindset now that because you're successful in this local market, it's going to translate. It never does. I've never seen a founder successfully take their learnings from their existing market and translate it into the US market. It's usually wildly different, right? The technical maturities are different. The buying processes are different. The willingness to spend is different. Just the way that organizations are structured and their risk appetite is radically different. So completely, the most successful founders take a day 1 approach when they come to the US, even if they have product market fit elsewhere. Second, your product is built for a different market right now. It is literally, you've taken feedback from your existing customers and have structured a product for that local region. So you actually might have gone down a little bit too far of a track. So now when you come into the US might be like, well, it has to do this, this, and this in order for me to buy. Right. So don't assume that your product is ready to sell in the US either. Like, again, take a day 1 approach and make sure you learn before you go out to sell. You have to earn the right to sell in the US. The third piece is, it's so easy to delegate this to someone else because you've proven traction in your local market. Startups don't make it in the US. In fact, the failure rate's close to 93% for international venture-backed startups to expand into the US because they delegate it so fast to a non-founder, and then they don't find product market fit here. So the biggest piece of advice I can have for you is assume a day 1 approach. Don't assume you have any level of product market fit here in the US, and go out and validate the vision you have from your local market and see if it's true in the US market. It most likely will need to be iterated on. I think there's a little bit of a lag here, Ron. I think. It looks like he's still shaking his head from the question.
I've seen from tree to another. Am I back? I can see you.
I can hear you. I can't see you anymore.
Okay. I'm going to kill my cam and
Kill
then
your
come
cam, that might
back
help.
real quick.
There you go.
Yeah. Let's do that. All right. I'm going to ask the next question. We only have 5 minutes left. So we have 3 questions. We'll see if we can get through them before we wrap. Surendra Maran on YouTube asks, what if you have a big competitor? Should you focus more on product than your 50-50 split and perhaps split your time 80-20 instead? What is, should I invest more time in my product to improve it because this competitor is more full-featured?
So one is competitive spaces. There's pros and cons. The pro is people usually have budget created for it. So that's exciting. The best thing you can do is find that injection point because it's that's typically where the unmet need will live, right? If you're selling, let's use a CRM, right? CRMs are a very competitive space. When you go out and talk to prospective customers, what part of their existing CRM is not working? Are they still struggling with? That's where I would try and find that secondary job to be done, knowing the primary job to be done is being served by probably most likely a competitor. So dig for that secondary job to be done and create assumptions based off of that. 2 is and when you find that secondary job to be done, it's typically going to be uneconomical for the incumbent to solve for it, right? Because they're focused on the 80%, not the 20%. Right. So if you can find that small sliver that they kind of ignored or haven't gotten to yet because they're so big and they're not as flexible, own that and really, again, try and leverage that to your advantage because you can always expand, right? You can be a bolt-in to whatever solution they're using now, and then you can use that trust to expand later down the line. So definitely seek to uncover the secondary job to be done by speaking to people already using maybe your competitor and understanding what is currently an unmet need or where are they still spending time and money because X solution is still not solving it entirely. And no solution solves everything entirely, right? You look at Salesforce, right? Salesforce is a extremely mature, robust, and well-used CRM, but you still need to hire a CRM admin to build it out for you because it's so challenging, right? So that secondary job to be done is really the services side to it. Right. And they haven't really, tackled that, especially down market. So what's that secondary job or current underserved need that you can exploit, knowing that it's going to be somewhat uneconomical for them to solve for it? Hopefully that was helpful.
Excellent. Next question. Cody McGuffey asks, can you continue to talk about when is the right time to go horizontal and find new customer segments after you find product market fit in your first segment? Is there a rule of thumb?
It really depends on how big your initial target market is. So I know people whose initial target markets are 1,000 companies that they can go after. I know others that have 250 companies they can go after. You really need to figure out, again, the math is probably going to answer that more than anything. And there's a little bit of intuition as well. Like when you have non-founders being able to service that existing market, I think that's usually a good sign. Meaning a non-founder is able to sell into that market you're in. That's usually a good sign that you as the founder can focus on the next market.
Very nice. Right.
So I'll read this. I think there's a little bit of a lag from Rob. Francisco says, I'm thinking of...
Excellent.
Oh, sorry.
Last question for today, because we're at time. Francisco on YouTube asks, I'm still here. Did the question come through or was I too garbled?
Go ahead. You can repeat it.
All right. So Francisco on YouTube asks, I'm thinking of building a case management app. I have a lawyer who's looking for a solution. Lawyers sometimes get a bit scary. What's your advice? And I'm going to interpret get a bit scary as, I've heard that legal is sometimes difficult to sell to, right? Or selling to lawyers is hard or something like that. So do you have any opinions on that?
Yep. Yeah. So if that is going to be the target market you are going to serve, it's good to get accustomed to that now. They are just risk averse, right? Like lawyers, if you think about just the natural the natural duty of their job, it's to be risk averse, right? And to reduce as much exposure as possible. So if you can understand what will get a lawyer comfortable and trust you, again, if someone has a true pain, they're willing to take slightly more risk. A lawyer is going to want to know what that risk is. So be super upfront and vulnerable with them and just say, listen, I'm building this. I would love you as a design partner. We're going to take this slowly, right? Let me solve this one job first, and then we can always add more. But again, it's good to know who your market is. But yes, I do agree. Lawyers are slightly more risk averse, but all that means is you just need to change your buying process and how you approach it a little bit differently, and just be upfront and vulnerable, and do things that, or ask them what would make them feel comfortable, right? If you were to come in and integrate. So yeah, that would be my answer to that.
Sounds great. Jen Abel, you are JJen_ABEL on Twitter, if folks want to follow you. And of course, JJellyfish.com if they want to see what you're doing day to day. Thanks so much for joining us today.
Awesome. Thank you so much, Rob. This was great.
All right. A couple things as we wrap. We have a MicroConf local coming up in 13 days in Philadelphia. August 16th, we're going to have Shanak Roy, the CEO and founder of YellowDig. Tickets are on sale, microconf.com/locals. And as always, thank you to Hey and Stripe for being our headline partners once again this year. They make everything we do just a little easier. Thanks so much for joining us.